Today, we will talk about special supply and demand areas. This is one of the most common trading strategy that is used by day traders and scalpers. We'll talk about drop-based drop and rally-based rally, supply and demand trading strategy. In the first section, I'll explain all the details of these patterns for day trading and scalping. In the next section, I'll talk about quality points and how to identify right trading patterns. In the final section, we will look at different entry styles, how to identify the best entries, best targets, and the best possible stop-loss points. If you're ready, let's start. Welcome our free trading course, all about price action trading strategies and smart money concepts. Rally-based rally and drop-based drop are a great part of supply and demand trading. If you are looking for a structured table of contents, I set it up for you. You can find it on Google Drive or directly from my website, which is in the description. It is important to watch videos in order to fully understand everything. Okay, first of all, RBR and DBD look like bull and bear flag shapes on the charts. However, it does not do anything with flag patterns. It has three stages. 1. The first rally, a strong move. Second, the base, the consolidation period. The base creates the natural demand areas in the charts. And the third is the second strong rally. As you can see in this example, a very strong rally happens and a consolidation period follows. Orders are accumulated and then the second rally happens. Never forget, bases are order accumulations that start the second rally or drop. Let's check the drop-based drop. The same concept happens here, a strong and sharp fall and then a consolidation period. The base is the accumulation of orders, which starts the second sharp drop, drop-based drop. The base is our natural supply zone here. Let's see this example. Price sharply drops and enters a consolidation stage. Orders are accumulating. Then the price makes the second sharp drop, which creates our natural supply area. But why? Why these zones are important and what makes them special? Key to understanding rally-based rally or drop-based drop lies within the low time frames. Once you identify the drop base in high time frames, draw your box. Then open the low time frames and observe the price action and see what you can find out. Inside DBD and RBR, there are extremely high amounts of price action structures, like order blocks, imbalances, breaker blocks, mitigation blocks, and so on. This is why drop-based drop and rally-based rally creates a natural supply and demand area, which is stuffed with lots of usable price action structures. Let's check this example. First of all, drawing these zones is quite a subjective matter. There are no certain rules for drawing these boxes. I just try to focus on where the first move stops and where the second move starts. And the area between those two creates the base. As you can see here, there is a very strong downwards break here. And before that, little consolidation period. You can easily notice the strong drop, then consolidation as a base, and finally the second strong drop. Let's open this area in low time frames and see what we have here. Once you observe the area inside the drop-based drop with the low time frames, you can notice the order blocks, imbalances, breaker blocks. So with the help of rally-based rally and drop-based drop, you are getting a spy glass. Without entering low time frames, you are identifying natural order blocks, imbalances, and breaker blocks. A pretty cool technique actually. I have a couple of quality checkpoints for these patterns. First of all, bigger consolidation is better for us. It means that more orders are accumulating, more transactions happen, more volume area, and a natural high volume node level from the volume profile. So bigger and longer the base means a much stronger demand or supply area. The second quality point is focusing on the third move. After the long and big base, how strongly breaks the base and the consolidation, leaving larger imbalances, giant strong candlesticks, and smaller wicks or not. These are special quality checkpoints that you need to focus on. The classic and the basic entry is very simple. Once you identify the base, draw your box as a demand or a supply area, and wait for the pullback, and find yourself a market structure change in high or low time frames, and place your entry. As a target, you look for imbalances above or below that price may react to. Let's learn the first trade setup. 1. Identify the rally-based rally or drop-based drop. 2. Check if there is a close imbalance above the base. 3. Wait for a liquidity hunt. It could be in the base or right before our entry. It is an optional step, location does not matter. 4. Confirm the high quality break. 5. Look for a market structure break with high or low time frames. Let's check an example. First of all, can you tell me where the drop-based drop is? Please pause the video and identify it. Well, as I said before, these patterns are quite subjective. Everyone has a different approach to them. As you can see, it is here. I mostly look for sharp breaks before and after with giant candlesticks and possible imbalances. You can also notice the swing failure pattern before, which gives you more confidence before looking for entries. And the giant imbalance above, a possible reaction point for me. Let's open lower time frames and look for entries. First of all, see how the liquidity hunted above the base from the consolidation period. Later price fills the imbalance before its final big reaction. Looking for a market structure shift and possible entry areas after the break. You can also notice the giant order block above that starts the big move. Using premium and discount zones to determine the best possible entry point, I need to short the asset as expensive as possible. Now this trade is not clear because I cannot see an imbalance above to pinpoint an exact entry. When charts are not clear like this, look for internal swing points. There is liquidity here. You may wait for a stop-loss hunt before placing an entry. As a target, this bullish support resistance Philip area grabs my attention. A nice place to take profit. There's also a giant imbalance there. Now price dropped sharply from this point, but I do not care. I would close this trade here. Support resistance flips and giant imbalance combos are dangerous. The second type of entry is just a bit more complex. You may need time to learn it. It mostly happens with the power of 3. As you remember, PO3 is all about 3 stages: accumulation, manipulation, and the expansion. The expansion phase generally creates many rally-based rally or drop-based drops. These are great places to look for this pattern and wait for a possible entry. Let's see an example. Okay, I want you to stop the video and point out the power of 3 for me. Here is the accumulation, or just accumulating without a clear direction. Here is the manipulation. The price makes a fake breakout, or you can call it a swing failure pattern. Finally, the expansion phase, a very sharp drop. Now, let's look at low time frames. First, where is the drop-based drop? Again, it is a subjective matter. Do not worry about drawing perfect zones. Just focus on sharp movement, then a base, and another sharp movement with giant candlesticks and imbalances. Yes, it is right here. This is my DBD area to look for entries. And you can see a swing failure pattern above, which gives me a layer of security. See the liquidity forms here. Always be aware of untaken stop-loss areas. Secondly, the price comes to our drop-based drop area. However, it cannot break above, instead performing a weak break. Later, the price breaks down very strongly. The thing I love the most in trading world, high quality breaks. Rest is up to you. Finding an entry from premium zone using order blocks, breaker blocks, and imbalances. There is even a nice Quasimodo pattern here if you noticed. I hope this video made clear how to trade rally-based rally or drop-based drop. Okay folks, this is it. We added a new tool to our trading toolkit for day trading and scalping. Every price action trader in my life use price action trading patterns with great results. If you can practice, you will master them in no time. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon.